I think they're in active discussions with a number of players in the market. They've been reported to be in discussions with mid-market PBMs, even larger players like Prime Therapeutics, that is the pharmacy benefit manager, the PBM owned by the Blue Cross Blue Shields. It's a $560 billion market.
But all they have to do is buy a small PBM and they can go large very quickly, right?
They have, well, it's about 18 to 24 months is what we're hearing. They have a core competence of very strong mail order fulfillment,
right.
Customer servicing, a very easy to use, simple retail online shopping platform. The reason they need to go into the PBM business is over 90% of the market is third party. They're insured customers. So if they just restrict themselves to cash pay, it's too small for a company like Amazon, and will make a difference.
And if they were to buy PBM, what could they do in the short term, at least, to prices for drugs on the consumer end? Because one of the things they've done, obviously, you've seen it with Whole Foods, and always the good news when they get into some part of the business is it seems to benefit consumers in the short run. I know there are larger questions about if and when they take over an entire market at some point, what will happen to prices. But how much margin is there that they can actually compress? And then, by the way, what is that going to do to everybody else?
Right. So in the near term, we have a more price transparent market. Drug discounts has been considered to be kind of the realm primarily of the PBMs, but Amazon brings strength and scale with 75 million Prime members. And, they could join a consortium of a large wholesaler. They could go direct to employer with the Health Transformation Alliance, and that would cut pricing down for consumers and just bring more transparency into the market. It's a market crying for transparency.
Although, if you talk to doctors now, they already say the PBMs are middle managers, middlemen who you don't need there, who in the end only drive up costs. It seems crazy that given all the scrutiny Amazon is already facing from going into Whole Foods and from people rising up and saying they're getting too big, you get into an industry like this, how much more does it put federal eyes on you for your growth prospects and for just for being so big?
Yeah, it is a very regulated market. It is a very entrenched and complex market, and perhaps that's the reason Amazon hasn't come in up until now. But I think they're taking their time and they're evaluating their glide path to entry. Their general focus in every other market has been to improve the pricing and the convenience, if you will, for the consumer. So the hope would be that while the middleman in the pharmaceutical business has been enjoying very fat margins, those would compress.
Would you want to own CVS, Walgreens, or any other stocks we were just showing on the screen?
I think there's, for CVS and Walgreens, there's immediate downside. It's an immediate threat because they can move share from retail chain stores to the mail order channel. Over time, I think it's going to be a threat for the PBMs as well. With Express Scripts, I think it's an opportunity and or a threat. If Amazon chooses to partner or do a JV with Express, perhaps Express can grow volume, but I think they will see margin erosion. I think there's more downside for the stocks here. We've seen the stock selling off in the last few days, but it could get worse.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.